Hello, everybody. Welcome to another episode of the Living Beyond the Numbers podcast. I'm your host, Jude Boudreaux. I'm here with our Director of Positivity, Caleb Arringdale.
Hello.
And so today we have a special guest. We've got Kevin Olson here. Kevin is our officially the trade desk associate, but he takes care of things for our trade desks and day-to-day operations within the firm. So Kevin, welcome. Glad to have you here.
Yeah, thank you. Excited to do this.
Yeah, awesome. So, tell me a little bit about, I guess, as a starting point, what's a trade desk, right? Like with clients, and they know obviously we're handling things and doing, investment stuff for them. But what is a trade desk? Tell us a little bit more about what that actually is.
Yeah, great question. I would say primarily it's running the portfolio for our firm and for our clients. Day to day, that's money coming in, clients needing cash out, things of that nature. On a more weekly basis, it's things like rebalancing. We can talk more about that. And those are kind of the primary things I would say in the short term. And then you get kind of strategic long term, managing the portfolio as far as on the equity side and on the bond side, working with our fund managers. That gets kind of a little bit more high level strategic. So it's some day-to-day activities. Then there's also kind of managing the portfolio at a high level. So,
yeah. Well, and I know, are taking some additional leadership on our investment committee too. So maybe share just briefly about, as an investment committee, how we meet and what kinds of things we're looking at there.
Yeah, I'd love to. Yep. So I'm a member of the investment committee. We meet monthly and more often as needed. The primary goal of that is getting a group together and looking at the portfolio, looking at, the markets, kind of what's top of mind, what's going on in the industry, just really trying to stay up to date on all of that information. Obviously, we look at performance a bit, just kind of making sure that that's on track. We're benchmarking, things of that nature. It's an industry that's constantly evolving and changing. And so whether it's products, whether it's the type of investment we're buying, things of that nature, we're always just trying to kind of stay on the leading edge of that and just ultimately making sure that whatever's coming out or whatever changes we're going to make, it's in the best interest of our clients. That's really, I think, the discussion that we're having at that committee.
Oh, yeah, absolutely. That's it's so great for all the things that might come up. There's always this filter of, always like to say it's top down, like what's the best thing for our clients, and then best things for our team, then the best things for our business, and then kind of the last part is the business owners. And as long as we keep that client focus first, everything else tends to take care of itself. Yeah,
that's right. And what drew me to this industry and what's so fascinating is it's just constantly changing. There's not necessarily a playbook of what happened last year will happen this year, right? And so I think that's what's so exciting about it. From the client standpoint, that can be kind of uneasy and unnerving. And so we try and, I think, kind of be that filter. All this noise coming in from the news, the media, and the financial industry, how do we kind of synthesize it down and make it digestible for our clients to, okay, how do we actually implement this? What's actionable? What matters to you? And what's really just noise, and ignore it, right? Kind of sifting through all the junk that's out there, I think, is one of our primary functions for sure.
What brought you into this industry? What's your background?
Yeah, good questions. My background, undergrad was engineering, graduated college in 2009, which was an interesting time to be entering the labor force. I don't know, probably spent. Yeah, that's right. That's right. What's interesting, I was thinking about that in kind of preparation. Even in undergrad, I was taking econ courses just for fun. I've always been kind of drawn to economics and finance. And so, graduated with engineering, worked in that field for quite a few years, and then was at a point where I just kept kind of being drawn to this industry and decided that I wanted to make that transition. Called up Vanguard, obviously a large firm, went to work for them for like 7 or 8 years. Had a wonderful experience. Nothing but good to say about that firm. Stay in touch with a lot of those folks, in fact. And then primarily for family reasons, was in Phoenix, wanted to move back to the Midwest to be close to my family. raised my kids around, their grandparents, and just got a little lucky that, you guys at the Planning Center were looking for someone to take over the trade desk. So really, really grateful that all worked out. And I've been here now 3.5, 4 years, and it's just been an absolute wonderful experience. So.
Yeah, and I like to say that everyone here is pretty smart. Like, it can be a pretty intellectually intimidating place at times, but Kevin is probably on the high end of that. His ability to break down some charts or help us out on the tax team or do other things is pretty impressive.
Thanks. Yeah, I need to say that. Appreciate
it. Yeah, I echo that. I think it's such a gift to us. I mean, you're saying you feel fortunate that this timing worked out, and I would say for a firm, we are super fortunate that you're here, because to have somebody who's got your experience, you're a certified financial planner, right? So you really have this background in the industry, yet you have this engineering training, and obviously like to think in this very systematic way. So for somebody who's handling systems of trading and rebalancing, it's just such a great fit, I think, to your ability, to the role. And I'm super excited that you're a part of it.
Yeah, I agree. Yeah, I love it. There's days I get to come to work and I kind of surprised that I get to do what I do. And yeah, I absolutely love it. So glad it's been a good fit for everybody.
Yeah. Oh yeah. No, that's fantastic when it works out that way.
Yeah.
Yeah. So I guess thinking about like in the portfolio, like you mentioned, you felt like you were always being drawn towards this. What do you think that was? What drew you to that line of work?
Yeah, no, that's a good one. I think there's a few things, like on the econ side and on just the markets. I mean, I'm still fascinated. The more I learn about it, the more fascinated I get. It's always changing. There's always something, you look back in April with the tariffs, like there's just always something going on. And I find that just absolutely fascinating. And I think there's something about kind of finance that it just kind of sits well with my brain. The idea of equity premiums and fixed income, and it's just a lot of numbers, and it just really speaks to how my mind works. And I think on the other side of it is kind of the highly emotional, psychological side of working with people and working with their money, and that also just fascinates me. The more I learn about that, you learn a little bit and you want to learn more, and I think that piece as well. Maybe part of it kind of tugs on my brain, part of it kind of tugs on my soul, and I think that balance, I really enjoy that a lot.
Yeah. Early on, and when I was at the insurance firm, I had a sales manager who always said, you have to have the heart of a social worker and the mind of a capitalist. And it's a little bit of like a cheesy line, but it's true. At conferences, people often ask like, well, how much in assets do you manage? I'm like, I don't know, like I have a general sense, but like I can say exactly how many families I work with. It's the people who are my clients, not so much the money. And, so I'm grateful that, people like you and the systems are handling, some of those day-to-day things on the money side.
Yeah, that's right.
So what do you find meaningful about this work? What to you means the most about the clients you're able to help?
Yeah, I think ultimately that, clients can use this money to improve their quality of life, kids, grandkids, charities, their community. I think, that we can take a pile of assets or investments and potentially grow that over time so that they can have a higher quality of life for whatever that is. That means a lot of things to a lot of people. And I think that's the best way I can think to say that. And I think, so that's one motivation or one goal. I think the other piece is just the peace of mind that someone can get knowing that, hey, I've got somebody to talk to in April. I mean, I'll use April again. The market dropped a fair amount pretty quickly. News is going wild. If you're by yourself trying to, kind of take in all that information and figure out what should I do, what should I not do, that's really scary. And I don't think emotionally we're necessarily designed to handle some of that on our own. So I think having a team, a partner, an advisor, somebody you can call and say, hey, kind of talk me through this. I don't know what to do. And, we can be there alongside folks for that. So I think that peace of mind too resonates with me a lot. I find that really meaningful.
Yeah. Oh yeah. Yeah. I mean, when those market events happen, there's a lot of conversations, a lot of meetings, a lot of things going on internally. So so I think my hope for clients is they're confident there's a process, behind this and what's going on. And I think that's the best way to handle those types of things.
Yeah, 100%, right? We have a process, we have systems, we've got a philosophy, and it's, again, a lot of it is trying to take some of that emotion out of the process and just think long term and just kind of execute the plan, right? And I think, one thing I was thinking about in preparation is this idea that like everything is driving us towards short term thinking. And what we want to be doing is just continuing to take a higher level view, a longer term approach, right? And I think the more that we can do that and talk about that, with our clients, the better the investment experience is going to be for everybody. I think that's just so important. Again, that you look back now, it's October. I mean, April feels so long ago, yet in the moment, it's kind of a shock, and folks are kind of getting excited. So,
yeah, along those lines, I think when people think of like a trade desk person, they think of like someone having 20 monitors, executing trades nonstop, just data. How different is your job from that? I mean, what you're saying is it's a much more long-term idea. What are the misconceptions people have?
Yeah, that's interesting. I agree. Yeah, I don't know if it's the movies or other places you do see that. Kind of the day trading, I think, is really what some folks maybe think of with the multiple monitors. Yeah, we don't do that, right? I think that's super important that folks understand. We don't do that. We're not trying to time the market. We just don't play that game. We manage money for the long term, for decades, and that's process based. I will say the fund company that we use, some of those folks will be in that buying and selling to kind of get the portfolio constructed how we want it in that way. But that's not my role. I kind of more oversee those folks is a better way to think of it. Just making sure they're doing what we've asked them to do.
Yeah. So then, yeah, on that day at the trade desk, like, tell us what kinds of things you might be doing. What's a typical day look like?
Yeah, love that. I mean, the first thing in the morning, getting all the systems up and going, it's going to be reviewing some reports. I think one of the bigger things is just, again, with the number of clients we constantly have cash coming in and going out. So just making sure if there's new cash, hey, let's get that invested, right? We want to put that to work for our clients. If it's freeing up cash, let's get that done. Looking at what's time sensitive. I think that is one part of my role that's a little unique is, the market's only open a certain time of day. And so things that are time sensitive, a lot can happen from yesterday to today. So kind of triaging, all right, what's most important? Let's get that done first. And throughout the day, I'll meet with whether it's our custodians, whether it's some of our other service providers, whether it's the fund managers. There's just a lot of relationships that we maintain on behalf of our clients. That sometimes it feels a little bit behind the scenes. I think that's a huge part of my role is just making sure that, again, we're managing money on behalf of our clients. The folks that we work with, we need to advocate for our clients and make sure they're doing what we've told them to do and what we expect them to do. I think that's a big piece of this role.
And that's something I don't think I really appreciated until I was in your office asking a question about some fund, and neither of us knew the answers. So you said, "Let me call them." And I was like, "Wait, you can do that?" And you're like, "Yeah." And you knew the contact. We had an answer within 5 minutes because you knew the person, you knew how to get that information. So that was really cool. I didn't know that was something we could even do. So that was great.
Yeah. Another thing I love about this job, talking day to day, is there is a fair amount of ad hoc stuff that comes up, whether it's portfolio analysis. We have clients with assets outside of the planning center. Hey, take a look at this. What would we do with it? What do we want to change? Just so many different kind of ad hoc things. And again, speaking to my earlier point about just how dynamic the markets are, this industry and the work we do is also very dynamic. It's always changing. I think it'd be safe to say no day looks the same as another day, which I love too. Kind of keeps me on my toes and kind of keeps my brain activated, which I enjoy.
Yeah. Oh, sure. No, I often will bring Kevin in for many things, but certainly, we've got a new client with this other 401k plan. Like, help us break down that allocation. Which funds are we going to use? And it's so great to have a systematic approach, evidence-based approach around doing that, and somebody with some expertise to help put that together and make it work for a client family.
That's right.
Yeah. So rebalancing is something that comes up a lot, and I find myself talking with clients about. So if you're just describing that to our listeners, like how would you describe what that looks like for us on a regular basis? What's really happening?
Yeah. Yeah. Rebalancing at its core level is just this idea of, hey, we want to buy low, we want to sell high, right? So I think everybody has heard that. Everyone agrees with that. And so if we start with that, the markets are constantly bouncing around day to day, week to week, month to month, year to year. The way we build the portfolio, we've got our equity piece, we've got our fixed income piece inside of there. It breaks down even further, but let's just kind of keep it high level. As equities, let's say those go up, and as bonds maybe kind of stay fixed like they're supposed to, we're going to take a look, and we put in kind of some I don't want to call them barriers, call them tolerance bands. We kind of say, hey, we're going to let this go here, and then we want to sell it. And so every week we take a look at the portfolio across every portfolio, every investment, and we say, hey, if this investment has gone up a certain amount over this tolerance band, we're going to sell that. Again, sell high. And then we're going to look throughout the portfolio at what's on the low side of its tolerance band, and we're going to buy low. And so that's really the idea. I think, it's just, again, to keep the portfolio in check. The clients are working with their advisors to figure out, hey, what's my kind of risk tolerance? What's the amount that kind of helps me sleep well at night? When I look at my portfolio, it's usually a certain mix of stocks and bonds. And we're going to, one of my roles is to stay accountable to that, right? Not let the equities just continue to go up. And then if we have a crash or something happens and a client experiences this large drop that they're not emotionally prepared for, that's not me doing my job well, I think. So yeah, I think that's really one of the primary purposes of rebalancing the portfolio.
And obviously we have software that helps this, right? That'll help with those bands. But is this a purely software driven decision, or how does that work?
Yeah, that's interesting. It's primarily software driven. Yes. I haven't talked to this point yet. I mean, a lot of my role is definitely auditing the systems that we use, the software programs that we're using. And so, yeah, it's a little bit of that with rebalancing. I don't, manually go through every single client account to check these, right? It's the software that puts out the proposed trades. I do go through those line by line, right? If we're going to trade in a client account, we want me or someone else to look at that. We aren't going to let the software do that without us, double checking that. So yeah, it is software based. We set up the tolerances. Again, back to the investment committee. That's a little bit of some of the discussions is around those types of things. But yeah, week in, week out, it's me kind of auditing that. And to be fair, we look every week. The markets don't always move enough every week to warrant rebalancing. If you look at a graph for this year, minus April, equities have kind of been up and right. Bonds have been up a little. So you would expect to see a fair amount of equity selling throughout the year to buy bonds, with the exception of the April drop. You see the inverse, right? Not every week, but again, as it continues to go up, it hits some of those rebalance bands, and then that's what triggers the trades.
Yeah. Well, and I'm just going to ask this because it's come to mind. Like if I was sitting here as a client and you say, no, the equities are going up, client, I'm thinking like, great. Like, so why are we selling then? Why are we worried about rebalancing at that point?
Right. No, I mean, primarily it's to, keep the risk in check. Yeah. I mean, you potentially could let that to continue to go and grow. Let's say you're a client who has a 60% stock, 40% bond. Over time, if equities, outpace the bonds, which, generally with the equity risk premium, they do, you're going to have 70%, potentially 80%. You're going to have kind of this stock runaway, which seems like a good thing, but if you worked with your advisor and identified like, hey, this is the portfolio that fits kind of my emotional risk, kind of the amount of risk I need to be taking. Markets do experience large drops, right? We know that studying the history of markets. And so when that time comes, again, back to the investor experience, you don't want to be surprised. I didn't think my portfolio would draw down as much as it did. And then you panic sell, right? It can create this kind of cascade of problems. And so, yeah, on the surface, it seems like hey, don't sell things that are going up, right? I want those to continue going up. But I think in this broader sense, we're looking at the risk, we're looking at that sleep well at night. And when the next, market kind of downturn comes, we want to have you well positioned for that.
And I think that's the benefit of having someone like you, because as humans, that's exactly the opposite of what we want to do, right?
Yeah.
Once it starts to go up, we get greedy and think, hey, let's let that sucker ride, right? Let's let that go as high as it can. But in reality, with the markets, you don't know. Next day, we could have it could be a cliff.
Yeah, that's right. And the absolute worst thing you can do, right? There's this pretty famous quote out there of time in the market is much more important than timing the market, right? And the worst thing you could do if that cliff comes and then again, our emotional instinct is stop the pain, sell the cash. And it's, the markets, I've been doing this over 10 years and it's like they react so fast. It's just continues to amaze me how fast markets, and April was an example of this, dropped massively. A couple of days later, paused tariffs, and they've been pretty much on it looks like a jet taken off since April. And it's just, you don't want to do that. And I think, again, being able to talk to someone, having that context, taking a longer term view can help us not make those types of decisions that ultimately, it affects your long term wealth dramatically, right? If you run the numbers and you look at what happens if you sell out in a crash, it's not a small amount over time compounded. It's a big number. And so, not making those big mistakes is such a big deal.
Yeah. I often like to think that, our work in a lot of ways has a lot more to do with farming than hunting. It's, basic things, good days, growing slowly, more than, stocking up the fridge for 6 months on one day. It's going to take a while, but, done right, it can be really consistent. So that's the goal.
That's fantastic. I've never heard that.
Yeah.
Took me a minute to figure out how it was going. I love that. That's cool.
Yeah.
That's cool. Thanks for sharing that.
So, well, and all these Midwestern, clients and things, I think we get the farm idea. We're with that.
That's right.
Yeah. So, on the client side, I guess, what do you wish that those families that we get to work with, what do you wish they understood about, the trade desk and the operations process behind the scenes? Maybe that helps them feel, get some peace of mind, feel really good about what they've chosen to do.
Yeah, I think a couple things. I think one, that we've got, kind of rigorous processes, rigorous systems. This is research based. I think you alluded to that earlier. We haven't talked a lot about that, but the portfolio design that we've got in place for clients is based on, kind of thorough research. There's a lot of ways to invest, and some are better than others. But having a system based on research that's tested through multiple market cycles, that clients are just comfortable sticking with is just so key. I think that's what we're doing. Yeah, I think that's a huge one. Yeah,
no, I come back to David Booth has a quote about, if you have an investment philosophy, you'd better have one, meaning that it's just one, like that we're not subject to the winds. And so I think that gets dangerous when you just start saying, oh, well, I think now this is happening and we're going to go in this direction.
Yeah, and I think back to
the time.
I think back to just all the noise, right? Whether it's, neighbors, friends, family, the news, now with social media, it's just constantly coming at you. I think just even having confidence in your strategy or in your philosophy, I'm becoming more and more convinced that's really important. So that you just say, hey, here's my plan, and I'm executing my plan. I'm controlling what I can control, and I'm partnered with, folks that they also have a plan. They're controlling what they can control. And it just, long term, again, looking at decades, the outcome is just going to be so much better than if you're just constantly changing and following the hot stock or listening to what somebody told you or panic selling because the market goes down. That strategy is just, one, it's not a fun investment experience. And two, it just doesn't math out over the long term. You're going to have significantly less wealth if you do that over the long term. It's just just the way the equity markets kind of reward patience in a strategy.
Yeah. Does it ever get nerve-wracking doing this job?
Yeah, good question. I think, I probably have a temperament that works well for this.
Agreed.
I think that's probably a big piece of it. I mean, I certainly, during those moments of, whether it's April, it's stressful in the sense of there's just elevated questions, activity, analysis, things of that nature. But I think, again, like the systems we have, they're designed for that, right? We know it's probably going to rebalance. We're kind of students of the markets, if you will. We know what history has done. We know that equity premiums exist for a reason, and there's going to be large swings. And so it doesn't take all the emotion out of it, but, even having an investment committee to, hey, let's get together. There's a lot of folks with a lot of years of experience that have seen a lot of different things. And, we kind of bring all that together and make the best decisions for our clients, given, one of the things, back to what I love about investing, is we don't know what's going to happen next year. Everything in the rear view, but you don't know what's going to happen next year. And it's so fascinating. So you got to have your strategy, you got to have your plan, and then you just kind of execute it going forward. So,
yeah, it's so hard living through and working through those down markets. Having been a little older advisor, a little longer in the industry, you get through the .com and the 2009, that big downturn. It's it's difficult to stay there with clients, even if you believe the right thing is to do is to stick with it. It's unsettling times for sure. But,
yeah, we've talked.
Yeah, good.
I would say we've talked a lot, maybe more about equities, and everybody seems to enjoy talking about equities more than fixed income. But a significant portion of a lot of clients' assets is fixed income, and you talk about just quality, and like in those events, that's where you want your fixed income to show up. And we use investment grade, right? So this is high quality treasuries, high quality companies. When I was at Vanguard, one of the most common kind of questions and calls I would get from clients is, hey, I want to buy the Vanguard high yield bond fund. And I knew, and I actually did this before this time today, just for fun, to see if it was still true. And I went out and I looked at all the bond funds. I sorted by yield, and there's number one, Vanguard high yield bond fund. And it's one strategy, but I always would make sure to replace high yield. And I would say, I'm going to call that a junk bond. And you just have a little bit more of a visceral reaction to junk bond than high yield, which sounds great, right? And there's a reason that has the highest yield. And, again, we'd like to say, hey, we're going to take our risk on the equity side. On the fixed income side, we want that to be rock solid safe. And that's what we do. And I think that's an important point too. We talk a lot about equity and the growth, but I think on the fixed income side, especially as we start talking about downturns, I want that to show up in the moment that it matters for clients and for our firm. And high yield historically doesn't do that. You'll see high yield kind of take a pretty big hit as well, look a little bit more equity-like. And so I always like to tell people, when you say high yield, say junk, and you'll just, I don't want junk bonds. All right.
All right. So Kevin, if we think about, if you could give listeners like one piece of advice or something about how they think about their portfolios, what would you share? What do you want people to know?
One piece of advice. Yeah, I think the best advice that I've heard over the years is just look at your portfolio less often. I think one point I've been talking a little bit about, but I'll try and make it more clear, is just this notion of long term. We have a lot of converging forces that are getting us to think shorter and shorter and shorter. And I think you even see that a little bit with investments and portfolios and, things like Robinhood and day trading and, meme stocks. And it's just shorter and shorter. And it's like, we're in the business of managing money for decades and growing investment wealth for clients and their families over decades. And I think the advice I would give, and I'm guilty of this as much as anybody, of, look less. It's just as simple as that. And, if you could have the discipline to look annually, or, when you meet with your advisor on, whatever cadence that is, I think that's huge. I think your investment experience would be so much better if we looked less. We'd spend less mind time on it. I think that'd be something that I'd give myself. I try, and I think I'm about at monthly. Sometimes I peak every couple weeks, but I'd love to get to annually. It's probably one of my life goals, look less, and I think even in my experience, it'd be better. So,
yeah, it's, my wife doesn't, have access to any of those things. She could set up the, Schwab app on her website or phone if she wanted to, but she hasn't. And so every quarter when we kind of look at reports, he's always pretty pleasantly surprised. And I think it's a lot happier experience when you don't look at it every single day. But even, back in the old days when I was at Janus and started in 2000, you knew that every afternoon around 4:00 Mountain Time, you were going to get a stream of phone calls because there are people calling to get their balance that afternoon, and they called every afternoon. So there were some people who were always wired to do that, even when it wasn't the easiest thing to do.
If we're swapping stories, so I was in the Phoenix office, which is the West Coast. And so, the markets would close at 4 Eastern. This was back in mutual fund days. It'd take a couple hours to price. And then like Jude said, you could just set your watch and the phones would start ringing of, hey, I need the balance of VBIAX. I need the balance. And they, some folks would have their little checklist, and pretty cool. And now more of it's online, but that's a good story. Those are good memories.
Yeah, you're right. It is interesting even for people to think like, oh, we didn't know exactly what the fund value was, because it does take a couple hours to finish the accounting at the end of the day. And
right.
Now with the ETFs, every minute exactly what it is. It's just how our world's evolving with the access to information. Yeah. So anything else you'd like our a listener to know about what's happening behind the scenes and day to day of a portfolio?
No, I think we covered it. No, I feel great. No, I feel really good.
Yeah. Well, we have a few important rapid fire questions too that we like to go through with everybody that joins us. So my favorites is always, what's your favorite animal?
Yeah, so I'll grab something off my desk here, a little show and tell. So my great uncle, this is an owl. So I'll say that's my favorite animal. The bottom of it, 1987. So he, just for fun, he was in the trades, but he made these for fun. Like a concrete sculpture.
Super cool.
Yeah. So this is something that's special to me. And my great aunt, they both since have passed away now. The eyes are little pebbles or rocks. And she said they would go down to the river, and she said they would just spend hours looking they had to be the perfect kind of little pebble. Mm-hmm. And so that's something super, super important to me and special. I keep it on my desk. And, I don't know if owls represent like wisdom or something like that, but kind of reminds me to be that. And so I'll say that's my favorite animal.
Yeah, I think they do represent wisdom. That's why they're always like in the libraries and stuff, right? So.
Oh yeah, cool.
I think Owl and Athena, were related. So goddess of wisdom. Mm-hmm.
Oh, cool.
That's awesome. You always got some new knowledge from me, Caleb. That's great.
Sorry.
No, it's perfect. It's we got to be who we are, right? Like, so, yeah. Well, so how about the best money that you ever spent? What would you say that is?
Ooh. I'll give two answers here. One's probably the good answer. Family vacations is definitely, this summer we went out to Colorado, then just had a blast and spent some time in the mountains. I alternate between like beach vacations and mountain vacations. And so we've got a lot of good memories in San Diego and on the beach with the kids. And, that money, sometimes it feels like it's hard to kind of save it and put together. And then once you get it, it's kind of like, I don't know if I want to let go of it. And I just have never regretted that kind of money on the kids and my family and vacations and experiences. And then the selfish answer is I bought an e-bike many years ago. When they were first out, they were more expensive. They've come down in price the last few years. This is probably, 5-6 years ago now I bought this. It was like $3,000 or $4,000, and I have gotten tens of thousands of dollars of joy out of that thing. So that's my selfish answer.
That's fantastic. So along those lines, maybe you just answered it. If you had to buy some happiness, what would you buy? How much would it cost?
Oh, that's easy. I'd go out for a nice dinner with my wife. I'd probably get salmon, glass of red wine, appetizers, and, 100, $200. And, it was just her birthday last weekend. So we did that and had a really nice dinner, and salmon was perfect. Red wine was good. Appetizers were wonderful. And yeah, it's hard to beat, going out with friends for dinner, family, you name it. That's something I really enjoy.
Yeah, that's great. And Caleb, I know you're a cook too, but I'll say like salmon is surprisingly easy to do at home. Like you get really good. Like, so if you're into it, we can talk about that. That could be a whole other different episode.
Yeah. And Kevin is actually pretty big into grilling as well. So like, if you're ever looking for some grilling tips, Kevin's your guy.
Yeah. My aunt gave me a cracked black pepper salmon recipe on the grill that's unbelievable. I mean, we fight over the skin. It comes out like crispy, and you put salt on there and lemon juice and tartar sauce, and I haven't made it a bit, but it's incredible. I mean, I don't think I've made it any other way since she gave me that recipe probably 10 years ago.
Nice. Growing up, my dad loved to make redfish down here in South Louisiana on the skin and scales on the grill, and yeah, it was a similar kind of thing. It's a nice way to have a good piece of fish for sure.
Yeah, that's awesome.
Yeah. Well, Caleb, yeah, what else you got on pops up?
Yeah. You kind of touched this. What about a favorite place to visit? I mean, you mentioned San Diego and Colorado. So is there a third or one of those two?
Yeah, I mean, Colorado is definitely our favorite kind of extended family place to go. And yeah, I love San Diego quite a bit. I've been there some of the most. I love the beaches there, and kind of a nice size city. It's not too big, it's not too small, and love that. Third place, good question. It's a really good question. I mean, there were some mountains in Arizona that were only like 90 minutes from us, and probably just the ages of my kids. It was, really formative years. And so we would go up there and just had a blast, and, kind of would just go off the grid, and whether you're playing in a lake or hiking or, whatever it was. And so to be in, 100 plus degree heat and know that in 90 minutes you could be in 80 and pine forest, pine trees and shade, and, just have a blast. And just, I think the kids' ages, they were, like toddlers into like early school, and it's just a really fun age to be in the mountains, just playing around. So.
Yeah, fantastic. Well, Kevin, so glad that you spent some time joining us today here on the podcast. It was really great to have you pull the curtain back a little bit and share with us and the families listening just more of what happens behind the scenes here.
Awesome. Yeah, appreciate it, guys.
Yeah, no, of course. Thank you for joining us. And so, and thank all of you for listening and spending some time with us. Please like, subscribe. If you've got some comments, shoot them on there. We'd love to hear from you. You can also reach us. I'm Jude at theplanningscenter.com. We've got Caleb at theplanningscenter.com. And of course, unsurprisingly, Kevin is Kevin at theplanningscenter.com too. So thanks again for listening to another episode of the Living Beyond the Numbers podcast, and hope to see you again soon.